Hello everyone, welcome to the first daily outlook inside TC. Now, just like I mentioned in the introduction video, the daily outlook will consist of a top-down analysis from the 4 hour down to the 15-minute time frame, along with any other daily, weekly, or monthly time frame price action analysis if it was necessary. Now, in the weekly outlook that I uploaded yesterday, I highlighted this monthly fair value gap is our drawn liquidity, right? And yesterday, you can see that on Tuesday, yesterday, we successfully reached it. So now that we've hit this drawn liquidity and we've reached it, the next objective for us is to figure out where price is likely to go next and what we can reasonably expect for price to do, right? Now, in these type of conditions, the best approach is first of all to stay risk off and wait for a clear and tangible price action before making any decision or reaching any conclusion, right? Now, for this week, our weekly objective has already been met. We've reached the drawn liquidity, which is this premium, which is this, not this, which is this premium fair value gap, right? We've reached it. But we still have 3 days left, like Wednesday, Thursday, and Friday. And we've also got NFP this week, right? Which means that there's a possibility for another expansion leg on the lower time frame, not on the higher time frame, but an expansion leg or a swing move on the lower time frame because we've got NFP. Now, our job is to determine where that expansion could occur and where that expansion could go to, right? Now, when it comes to NFP day, I personally treat it as a risk off day. I never trade, I never trade on NFP, CPI, or FOMC days, right? It's just not worth the volatility and the unpredictability for me. Now, that being said, I'll still be monitoring the charts, but there will be no execution from me, from my side, on that day, on NFP day, right? I'll still trade on Wednesday and Thursday if I found any high quality and high probability setups, but on Friday, I'll be staying risk off and won't be doing anything. But as you can see, we still have Wednesday, sorry, Wednesday and Thursday left. So now let's see what price could do or might do on these days and exactly what my expectations are. So let's look at the charts right here. Right here, you can see the monthly FVG that I had previously outlined in the weekly outlook. We've reached it. But if we draw out the consequent encroachment of this FVG, right? I've already drawn it out, but let me make it clear for you. If we draw out the 50% of this FEG, you will notice that we haven't yet reached the midpoint of this FEG, right? And also, if we take this expansion leg as a dealing range, you will see that the 50% of this dealing range almost aligns perfectly with the 50% of this FEG or the consequent encroachment of this FEG, right? Now, look, even if we were bearish on a macro level, which we are not, right? Then even in that case, the least we could expect for price to reach is the 50% of this whole dealing range, right? The least we could expect price to do is to move into the premium region, right? Because that's exactly where price is inclined to go to when it's in the discount region, right? So even if you are bearish, which we are not, we still would expect price to reach here. We are bullish currently, so we can definitely expect price to reach this equilibrium of this whole dealing range or the consequent encroachment of this FEG or the premium region of this dealing range, right? So based on these factors, the drawn liquidity for me for the rest of the week is now this consequent encroachment, or in other words, the midpoint of this FEG or the 50% of this FEG. You can call it whatever you want, right? Consequent encroachment is just a buzzword, right? So that's my long-term drawn liquidity for now, which is this equilibrium point of this dealing range, right? That's what I'm expecting price to do or price to go to for this week. Now let's move down to the weekly time frame and see what else we've got. You can see that on the weekly time frame, the narrative in the market context remain the same, right? Price has taken out this discount swing high. The reason I've called this discount swing high is because it's obviously in the discount region of this whole dealing range, right? What we've done is we've taken out this discount swing high, but you can see that that alone isn't enough to send price down immediately, right? We need a confirmation on the lower time frame, like the daily and 4 hour, before we can expect a reversal from here if we were bearish on a macro level, which we are not. Now, obviously, yes, price can drop from here immediately, but we need, just as I said before, we need clear confirmation before acting on it. Also, if we look at the GBP chart, the fiber or the DXY, not the, you can see that we've also got this SMT divergence right here, right? What EU did is EU took out this swing high and made a higher high, but DXY didn't made a lower low, which means that we have an SMT divergence too. Right? But again, let me reiterate it. The long-term down liquidity is still higher even if we have this bearish SMT divergence, right? So we're not going to force any unnecessary short trades based on just one or two factors, right? That's completely dumb and amateur. We can support the idea of a retracement, but as I said before, we need multiple lower time frame confirmations to back it up, right? And more importantly, the market context and the narrative needs to align on both the daily and the 4 hour time frame. So, what's my expectation on the weekly? I'm still looking for price to reach the 50% of this daily range and this monthly fair value gap, and that is basically my drawn liquidity. Now, does that mean that price is going to reach there straight away from here? I don't know, right? Maybe we could see a retracement first, right? Maybe we could see a retracement first and then expand from there. Maybe we form a consolidation here and then expand to there, right? Maybe we reach back to this order block and then expand to there. Maybe we expand to that FVG straight away from here, right? I can never know that, right? But what I can do is I can wait for price to give me clues on the lower time frame, and based on those clues I'll anticipate a specific scenario out of all of these that I just told you about, and then I'll categorize each one of them into different probabilistic scenarios, and then I'll only trade the one that is high probability and I'll trade it accordingly, right? You heard it. I don't know what can happen. We can have a retracement and then higher. We can have a consolidation and then we can go there straight away. But, right, I can never know exactly which one will play out, right? But my job is to wait for price, just as I said before, to give me clues, and then based on those clues, I'll anticipate a specific scenario, and then I'll trade it accordingly, right? But without any confirmation from price action on the lower time frame, these are all just guesses and nothing more. But one thing is for sure, the drawn liquidity is still higher, which is this 50% or this midpoint of this dealing range, right? My only job on the higher time frame, like the weekly, monthly, and daily, is to determine the drawn liquidity, and I've done that. So my job here is done. Now let's go down to the daily time frame and let's see what else we got. On the daily time frame, you can see that we've had this case of death sequence here, right here, and after that price expanded higher and reached the drawn liquidity here, right, and it took out this swing high. Let me remove this. Now whenever a swing high like this gets taken out, or we reach a long-term drawn liquidity, we should never, let me repeat, we should never immediately expect a reversal from here, right? Let me reiterate it again. We should never immediately, without a confirmation, expect a reversal from here, right? That's extremely risky, and more often than not, you will lose money trying to do that. The only time you should anticipate a reversal is when price shows clear confirmation, like a lower time frame change in the state of delivery or some bearish order block formation, right? But blindly forcing or blindly forcing a reversal trade without a confirmation is a huge mistake, and especially when the higher time frame drawn liquidity is still higher, right? You should never do that. Now let's build some context before concluding anything or making any decision. So looking at the weekly profiles right here, we can see that Monday formed the low of the week right here, right at this order block, right? Monday formed the low of the week and Tuesday expanded higher. Now based on this, we can expect two possible scenarios for Wednesday and Thursday, right? The first scenario is that we can expect Monday and Thursday to form a retracement till here before Friday expands higher towards the drawn liquidity. That's the first scenario that we can expect based on a price-based narrative made through weekly profiles, right? Or we can expect a continued push higher on Wednesday and Thursday, and then it is followed by a Friday reversal to close the week down or to form the higher week of the weekly candle, right? These are the two scenarios we can expect price to have based on weekly profiles, right? But now we need to go to the lower time frames and figure out which one is more probable based on a proper narrative and proper market context. Now if we look at this price section right here, you'll notice that we've got a daily fair value gap above this swing high. Let me write out, right? We've got this daily fair value gap, right? Now if we take this expansion leg as our dealing range, you will see that this FVG is inside the premium region and near the optimal trade entry or the OTA level of this dealing range, right? And you can see that the OTA level or the premium region is usually a good place for retracements to occur or for price to react off of key levels, right? This is a premium key level, and maybe if price tests it, we can then expect a Wednesday retracement, right? But obviously, as I said before, there has to be a proper narrative and market context, and this alone, this factor alone, or this key level alone isn't enough to force or to make price move lower, right? So let me say it again. If I'm expecting Wednesday and Thursday to to retrace before Friday expands higher, then I'd want price to at least test this FVG before considering any further expansion higher, right? Now I won't straight away force any bearish trades here, right? I'll wait for a lower time frame confirmation. Now, does that mean that price can't reverse immediately from here without taking this reaching this FVG? Of course it can, and it might, but that's not a high scenario or high probability scenario right now. The best thing for me is to wait for confirmation and wait for price to show me clues, right? Now price might reverse straight away from here without testing enough any of this, right? Or without reaching the drawn liquidity, and that's completely fine. I just won't trade it, right? Our job is to stay out until everything aligns, right? I'll only take a trade once it aligns with our motives, right? It aligns with the narrative that I have built, and it aligns with the proper market context, and when it meets my guidelines and protocols. And without all of those things, I'm not trading it, right? The reality is that there are going to be hundreds, if not thousands, of moves and expansion legs that won't align with our guidelines and protocols, and we will miss them, right? And that's completely normal. That's part of the process. Your job as a trader is not to catch every move. Your job is to exploit just one high probability swing or leg, expansion leg, and that would be more than enough for the week, right? You should never feel pressured, you should never feel forced, or you should never feel inclined to trade every single swing or every single move, right? That's not what professionals do. That's the job of amateurs, right? You should never pressure to trade every single move or every single swing, right? That's not how trading works. We as professionals, our job is to wait for the highest probability trade setup, and if it doesn't come, we wait some more, right? We've already waited enough, we will wait more. That's our job, right? Now, enough of that. Let's see what else we've got here. So, what's the plan? The plan is that I'm expecting a retracement on Wednesday and Thursday, right? But obviously, as I said before, I expect price to at least test this FEG first. Then I'll need lower time frame confirmation before I think about taking a trade or framing a trade idea. And if that happens, I'll then move down to the lower time frame and try to frame a trade idea. But if price reverses straight away from here without testing that level, then I stay out. Simple as that. Now let's go down to the 4 hour time frame and let's see what we've got there. On the 4 hour time frame, you can see that we've obviously taken out this swing high, right? And we've got that daily FEG right here, and then we have this monthly FEG right here, and this is the 50% or the consequent encroachment or the midpoint of that monthly FEG, right? Now, now right here is where most traders mess up, right? They immediately start framing reversal trade ideas from here, and in doing so, they get wrecked most of the time, right? Not always, but most of the time they get wrecked because they start immediately forcing reversal trade ideas from here, which never happens most of the time, right? Yes, sometimes they'll get lucky and catch a winning reversal trade, right? But that one lucky win does not justify making the same risky move over and over again, and forcing the same risky reversal trades from here, even when the drawn liquidity and the directional bias is higher, right? What matters is the bigger picture, right? And whether over a long track record, like hundreds or even thousands of similar scenarios, can you actually build a profitable edge from this sort of approach and this sort of approach of forcing reversal trades without any confirmation, right? Could you derive or build a profitable edge from that? And the truth is that you cannot. Most of the time, you will lose, right? Yes, sometimes you will win, but don't glorify those small wins, because in the long run they'll destroy your trading psychology and your consistency, right? Always keep your focus on the big goal and the bigger picture, right? Now let's talk about how I'm going to frame a trade setup around here. So if I want to frame a retracement, right, a Wednesday reversal or a Wednesday retracement trade idea from here, then I need price to, first of all, either reach this consequent encroachment of this FVG, right? Now we've already reached this FVG, right? And what I want price to do now is that I need a proper 4-hour market context, a proper narrative, and a 15-minute order block confirmation, right? And without all of this, I will stay risk off. Now, the way I'm going to frame a setup around here is that I want to see price play out around this level in the following manner, right? In the following manner. Let me tell you what's the manner or what's the behavior that I want to see. I want either the 1 a.m. 4-hour candle or the 5 a.m. 4-hour candle. It doesn't matter which one, but either one of them to close somewhere either around here or somewhere below this midpoint of this monthly FVG, right? I want either the 1 a.m. 4-hour candle or the 5 a.m. 4-hour candle. It doesn't matter which one, right? I want them to close either around here or around here, right? If it's the 1 a.m. candle and it closes here, then I want to see price purge, right? I want price to see purge it during the 6 a.m. The 6 a.m. hour. That would be a high probability time for a liquidity grab, and then I want to see a lower time frame confirmation, and then I'll frame a bearish trade out of this 1 a.m. candle range. But if it didn't happen, and let's say price just did this, instead of giving me an order block confirmation entry, then I'd just stay out, right? Even if this candle range gets purged, then even then I'll still wait for a lower time frame confirmation before taking a trade, right? And if it's not the 1 a.m. candle, and if the 1 a.m. candle does something like this and it just goes higher till this 50% of the FEG, then I want the 5 a.m. candle to close right here, and then I want to see that particular 5 a.m. candle to get purged either at the 9 a.m. hour or the 11 a.m. hour during the London close session, right? I want price to then purge the 5 a.m. candle, and then I want to see a lower time frame confirmation, and then I'd frame a trade here, right? These are the two outlooks and the two scenarios that I want price to play out, and without either or any one of them, I won't take a trade, right? And just as I said before, an order block confirmation is a must. I won't just take an entry straight away after the turtle soup of 1 a.m. candle or the 5 a.m. candle, right? I want to see a confirmation, right? And for an even more high quality trade setup, I'd also like to see an SMT divergence with either G or DXY forming around either this level or this 50% of the FEG, of the monthly FEG, right? And the SMT divergence could be in the form of price or EU taking out the candle range high, whereas G or DXY failing to taking out the candle range, right? But just as I said before, even when all of this happens, right, when all of this aligns with each other, I still won't take a trade unless we get a clean 15-minute order block confirmation. Let's say price can maybe do this as well. Maybe it doesn't give me any confirmation, it just goes higher, right? And in that case, again, I'll stay risk off, right? I won't trade it, and maybe I missed this move, and it's okay, right? But if I want to frame a trade idea, it would be in the form of this. If I found any trade idea today or on Thursday, I'd make sure to give you a signal with stop loss and take profit before the trade plays out, right? I'd make sure to share it with you. I've already shared one on Monday, and I'd make sure to give you another one as well this week. Right? And this is exactly what we call properly outlining and properly aligning everything with each other before framing a trade setup. Now, one last thing, don't ever fall for pattern trading, right? Now, some traders would try to pattern trade this candle right here and would take either this or this candle is a candle range and try to trade it, right? And you can see they got wrecked, right? Some traders would pattern trade these candles and randomly select every single candle without a market context, without a narrative, without making a proper story behind it, and obviously they got wrecked. But let me tell you something, that's not real trading, and that's not how you select a candle range, right? That's just pattern trading. And while it might work once or twice, over time, in the long run, it won't, right? Just like I said earlier, that's not a profitable approach in the long run.